Welcome everyone to the Kindle Report, where I share my 41 years of experience to help you manage your portfolios. Remember to like and subscribe to this channel. Anyway, I just was thinking before I went live, it is almost September and time keeps moving. Guess what? It will be 42 years ago I started in 1979 in the market. So been a lot of water under the bridge, as they say. I've seen just about everything. So as we get into this week, we've got a lot to digest. Unemployment, the last 2 days of August, the first month of the third quarter will be behind us. And so we've got a fair amount to talk about on, let's say on Tuesday night's video. I believe I'll have the new calcs for the market grid on the monthly charts, and all of that will be updated at that time. So right now I don't have those updates. A couple things that I want to talk about, and I mentioned on Friday's video that I would discuss what Powell said. And man, I have such a hard time watching the dry approach that these people have. That, you know, they're so stiff. There's no personality. But Powell assured us that once again that the inflation is absolutely temporary. He didn't use, I didn't listen to every detail, but he didn't seem to use that transitory word, but temporary this time. And meanwhile, while we sit here, the supply chains are locking up again. And we're seeing the ports start to stack up, even almost as big as they were earlier in this cycle when we saw the ports. I did a video last year where I had pictures of all the boats and coming into the LA harbor as well as Long Beach. It just continues just to get worse as we go forward, not better. And whether it's Delta variant, whether it's people not wanting to go to work, who knows what the issue is, but it's definitely starting to lock up again. If that happens, we may get another surge of inflation, prices starting to go through the roof again. It's not over, okay? And there's a couple things that I'm going to talk about tonight. We're going to look at the 10-year. We're going to go through interest rates. I'm also going to cover Bitcoin. I like to do that on Sunday night for Monday and the week as we go forward. And I'll cover the cryptos, and then we'll go through the usual things going on, and we'll look at crude oil, which is obviously being affected with the hurricane coming through the Gulf and hitting Louisiana just a little bit ago, New Orleans, and you know it's terrible. Unfortunately, on the anniversary of the Katrina. So what irony is that, right? But you know, the last couple of days of the month, this isn't really that material. There might be maybe some window dressing to come in. I don't really see anything material at that level. I think as we finish the next couple months, I've been talking to you folks about the potential for the employment and other things to start to increase, not decrease as we go forward. Now, we're still reporting what we're seeing on Friday. We'll get the unemployment numbers. I'll go through all the economics here in a minute. But I do see this situation starting to really get worse, not better, especially as we get into October and November. So it's going to be some time before we start to see the reflection in these numbers. So let's go ahead and talk about what's coming out this week. Monday, pending home sales, no one cares. On Tuesday, we have FHA price index, case shower. We're going to see probably 18% inflation on the case shower numbers for the housing. We're really looking at consumer confidence coming in at 122. That's supposed to falter a little bit. That may be somewhat of a negative number, but just remember right now we're in that mode where anything negative is probably positive. So bad news is good news, that cycle. And it may be right now that all news is good news as the markets just want to continue to climb this wall of worry that we've been in. But we look at going into Wednesday, we have ADP expected to show 700,000. ISM manufacturing, 58%. That's actually, I believe, a slight downtick. These manufacturing numbers, the ISM numbers coming out this week, are going to be critical to watch. The Fed already knows these numbers, so there's, you know, they addressed that in Powell's message on Friday. I'll go back, and there was a couple other things I thought that was interesting that he discussed on his talk on Friday. But then we get into Thursday, claims expected 345. That's about where they were last week. They were up just a little bit. Continuing claims are a non-event at the moment. On Friday is the big number, right? That's going to be unemployment expected to show 800K, 5.2% unemployment on change, and we're also going to get ISM non-manufacturing numbers expected to be at 60%. But these employment numbers, I'm going to show you a chart here just real quick because I want to discuss this just a little bit. The employment numbers are doing something very interesting, and there's a couple points in this chart that I want to talk about. We're right into support, and I've been talking about this for years, that you can use technical analysis and you can see where these rollovers are going to happen. And it was interesting. This is obviously this comes out monthly, and we see this big spike up, but now we're coming to this demand line or the support line right here, and that number right now is at 5.44. And my expectation is, and this is why I've been talking about this, that these are the PPMs in TradingView. I'm still working on the release of these. It's been just a pain in the butt. I'll talk about that at another time. But what we're looking at here is the PPMs are still very strong underlying support. And the other thing, and I've talked about this on a couple of charts if you're watching the channel a lot, is this upward slicing 21 period moving average. It's way up at 6.96. And I've been talking about unemployment going back up to 6.2, 6.8. This is what's going to draw this number up. I think we're going to see this increase, and the Fed therefore is going to keep their pedal on the floor, keep pumping money, the taper, all the talk. I'll just kind of integrate what Paul was saying, the whole taper concept that was promoted on Friday during some of the Fed presidents talking, and Powell, they're admitting they need to back off on the purchases, but this may be the reason. This is where bad news might be good news or a reason to keep things just as they are. So this number, I think, will hold around these levels here, 5.2. This is going to be the bottom of the recovery from this standpoint, and then we're going to start to see some things up. So we'll start to move up. So this month, we're probably seeing an unchanged number, maybe even a slight uptick as we come into Fridays and this number for August. But when we come into September, it's not going to probably show up until the October report for September. We'll see if that continues as I go through and just monitor all the output that we're going to see and claims and all the other numbers that we're able to estimate what might happen. But this is the big thing that everybody's talking about. This is what it's all about right now, and this will be watched very closely. There's really, like I said, nothing really coming out that's going to tell us much about inflation. There will be, like I said, it's all going to be about the unemployment numbers coming out on Friday. ADP will have probably virtually no effect whatsoever. So we look back on last week as we finished the last full week of the month of August. We were up 1.5 on the S&P. We're up 0.28 on the NASDAQ. Russell up 5.1. So I talked about, if you follow me on Twitter, I mentioned that we did get a breakout of the Russell. I'll go through all the details. I actually added another spread for us to watch on the screen, so we'll go through that in just a few minutes. But this is really the whole cycle that we're in on everything is really going to start to play out in the next couple months. I thought I do want to back up on the inflation scenario and what Powell said. I've got some notes here. Powell said that inflation should wash out over time. That was the exact words he used, wash out over time. So if the supply chain is starting to tighten a little bit and things start to get jacked up in the ports again and everything tightens up, especially if we see any downtrend anyway in the unemployment like I'm talking about, I think things are going to get real sketchy here in the next couple quarters. So I'll update that as we see that. So let's go ahead, and what I want to do here is I want to go to the WaveTech database. Let's talk a little bit about what's going on with the database and what kind of traction we're getting and things of that sort, because that is going to be fairly material as we go forward. Right now, the weekly or the intermediate actually upticked a little bit back to 64.26 from 62%, so not a big deal. There was 647 buys versus 314 sell signals, so a slight positive rotation in the database. This is actually very positive. I talked about this in the last couple of weeks. As far as the percent bullish goes, is actually telling us that the intermediate trends are still very solid. We're not seeing that rollover that I've expected to see. And what we're seeing here is just a complete stabilization right around that 62% level. I talk about these database numbers all the time. 62, 68 are numbers to watch. And above that, we get into around 74, almost 80%, 78, 79 is the next level. And that's usually an extreme. On the downside, we got through 62. It's a void down to 48 to 42% is the next level where it typically will stabilize. And as long as the database on an intermediate basis stays above 42%, that's going to keep the underlying trend positive enough to keep crawling higher in these prices as we go forward. So as we look at the daily numbers, these are getting a little more interesting. There were 2,417 buy signals, 168 sells, otherwise basically a 24-to-2 ratio on the buy. So it's bullish across the board there. We moved up to 36.77 numbers I just mentioned. We're watching for a 42, and then if we get above 42, that will be the trigger point that will signal much more activity on the upside from the standpoint of the trends continuing. Now, what I'm seeing here is we're starting to see a lot of these small cap stocks, financials, and energy stocks were a big leader last week because the energy sector was up 7.3%. And so we're seeing a lot of this rotation come in, and it looks to me to be a continuation of this trend that we've been watching for a while. I've talked to you a lot about this in the past, is that the rotation that keeps happening in the database, we get up to around 42, 44%, then we back into 30%, and we went down to 24, 27 on the last little mini sideways with a little decline that we saw. But this database keeps not being able to get traction. And I'm going to go through all of the details on the Russell and the breakout in the Russell and some other things. So it's very possible we're going to click up back over this 42% and we'll continue to get traction on the database. And it's going to be in that small cap, mid cap areas where the rotation is going to happen. It'll be very interesting to see how this plays out, because if we start to see more of the financials, there's a lot of mid cap and small cap elements in that financial sector, and the financial sector is one of the largest sectors in the market. So it's going to be interesting to see how this unfolds as we come out of this particular cycle, or maybe enter into a new cycle. Let's go ahead, and next what we'll do is we'll start digging into these markets here And I think the interesting thing to look at, we've seen a little bit of selling come in. We were up about 2 or 3 handles here a little bit ago, and we've backed off a little bit. But we'll go through the typical cycle of what I do on every night's video and every night's show. Is we'll go through the futures on the S&P and then the cash, and then we'll hit NASDAQ, Russell, go through all the spreads, and then we'll get in. I'll probably go through the dollar briefly and interest rates, and right into crude oil, gold, and Bitcoin. And so that's what we're going to head through. My guess is that's going to take us about 45 minutes or so to get to that point. So this is actually a 60-minute graph on the S&P. There's going to be some pretty good support. I'll show you on the market grid here in just a second. We go to the daily, and we continue to grind through. I mentioned on the numbers on Friday. On the market grid, the RTX number on Friday was 4488. Well, we blew through that like it wasn't there, and we got an RTX sell signal. So what that suggests is that we're likely to get some consolidation here, and maybe 2 days. We printed so far, the high has been 45.13. We're right now 45.04. So we look at the R1. Typically, the top will be around R1, possibly an R2, but we printed 45.13.25. R1 was 45.13.50. So look for at least an S1, possibly an S2. So we could see some weakness, but likely going to stay between maybe an S1, R1, and I look if there's any rotation, it's probably going to be to the S2 level, 44.89. The other number, continuing to talk about this, is that 10-period moving average. There's no momentum at all in this market. We're starting to see a little buildup. You'll see here, I'll put a cursor on PPM2 down here. It did break out of its first and second derivatives. That's a positive, but a minimal positive. All it suggests, and I've talked about this every night, I think, for the last 4 or 5 sessions, is that we're going to continue to climb along this slight incline, staying above the 10-period moving average. It's going up about 3 handles per day, so it'll be 63. It'll be up in a couple of days. It'll be around 44.70, and we should stay well above that number over the next couple of days. So for today, as I said, look for R1, S2. Volatility is still fairly narrow, so it's likely we could see R2, S2 and blow it up a little bit, but I don't think that'll be the case at all. That's 45.22 with the extreme on the downside, 44.89. So let's look and see how this week's set up from a market grid standpoint. R1 44.25. Last week was 45.10 high, so that's probably a decent number. We're going to start to move most likely over the next 3 to 6 weeks minimum. We're going to move toward this 46 handle, and it's just going to continue to climb along this line that I've been talking about. The PPMs, PPM1, 0.53, 0.44, and 0.55, and the expectations here is that this angle of attack will maintain itself, and that this intermediate trend is absolutely rock solid along the line. 44.15 is a long ways away. It's almost 100 handles away, but this is the future. So this is the actual calculation for this market. So let's go to the SPX and start to look at a couple numbers there and set the cash markets up. So SPX also got that RTXL signal. 44.87 was RTX, traded up to 45.13. So it was a crazy push up through those numbers on Friday. They just kept rallying, and there were just everybody was short covering. There's actually, it's amazing at this all-time new high. It's almost everybody. If you just glance around YouTube or around the markets, there's the 5 reasons why the market's going to collapse, the 10 reasons why there's a top. All of those stories are out there, and as long as those stories happen, we're just not going to get to the top. And all of these things are really starting to build as far as that contrary opinion goes. But looking at the PPMs here, we did see PPM 1 on the cash actually penetrate and get through its first and second derivative. PPM 2 is ready to go. PPM 3, when these things set up like this, if we get follow through, we're likely to see this market break out and start to surge. But I think for at least 2 sessions, we'll stay within the context here. We look at the market grid for today. I'll zoom in on that so you can see it a little better. S1 02, S2 44.95, so R1 15 and S1 45.02, probably an R1 S2, but look at the potential for a broader range just because this is fairly narrow in expectations. So R2 45.23, the extreme 44.95. If we printed just below that 45 handle, we'll probably see a bounce off of this, off of those levels. I don't think we're going to see anything that looks like any type of sell-off, and not especially before the numbers that are coming out this week on the unemployment and everything else. I suspect will remain fairly stable there as we come in to go through this week. So just in a general sense on the equity markets, I still expect to see them just keep climbing along these very moderate trend levels that we're seeing. Just going over to the cash on the weekly on the cash. Last week we printed up to the RTX number was 45.16 on a weekly basis. We printed 45.13. We go to this week. Let me zoom in on that number for you. This week we're looking at R1 on, this is a weekly expectation. R1 45.26, S1 44.92. We could stay in a fairly narrow range. R1, S1, if it's going to expand, I think we're likely to see this thing move up toward this R2 level 45. And that's going to be the extreme. I don't think we'll be able to get above that, but we should see it move up toward that level. So a couple days of sideways, and then we'll set that pattern up. Next market I'll go to is the NASDAQ. NASDAQ also this is the weekly NASDAQ. It just continues to climb as well. Zooming in on just this pattern here, you'll see that that angle of attack here on the 10-pair moving average, 15.041, low 15.424 overnight. So we're a long ways from that. This is the weekly. But we look at the weekly expectations, we're looking at 15,593 in R2. That's very highly likely to be reached. On the downside, S1, 13,347. So your range on a weekly on the NASDAQ will be around that range. Let's go to the daily and just get some expectations there. But this market's going to continue to move higher. There's no real downside risk right now. We look at the PPMs on the NASDAQ on a daily, we're still getting that same basic configuration I've talked a lot about, and that is that the relative strength in the market is stronger on the NASDAQ yet, even though I'm going to show you in a minute that my expectations are going to be that the Russell will start to outperform here, and we'll go through the Russell next. But this is where this thing starts to break loose. Now, these are relatively stronger numbers, but we did also get the RTX sell signal. So look for a couple of days flat on all these markets, just kind of meandering around. There's not any real material news. It doesn't look like anything's going to drive this thing. So there'll probably be some decent supply above and support under this market to stay in that range. All right, let's dig into the Russell. This was just a huge breakout. This is the daily Russell, and I think one of the things that was interesting about this, I talked about these numbers that were hanging around this. I'll show you on the weekly chart, around 2250. That was your breakout point. It just blew through everything. It was like everybody had the same number, and when it broke through, it was just absolutely crazy. So I just said that the NASDAQ on a relative basis has been stronger, basically relating that to the S&P, not necessarily to the Russell. So you'll see the Russell PPMs are exploding. PPM 1 has exploded, PPM 2 and 3, they're all going together. And when this configuration happens and this lines up like this, it is just the most bullish signal that there ever is in this pattern. So we start to look at expectations. This is the cash Russell daily. We look at expectations for tomorrow. S1, R2, that's 2267, 2298. So that would be a reasonably positive move here to move up toward that 23 handle. I'll show you here on the weekly next. And we did get an RXT breakout, but this is the number. I've been harping about these numbers for a while. This 2253, we got above all the averages. PPM 1 broke out, it's positive. PPM 2 has turned through its second derivative, and PPM 3 is turning up. But PPM 3 has actually been what's the strongest part of this trend, and I've talked about this upsloping 40 period moving average. We did close under last week, under that last week, but we are seeing this thing now just blow up as we've seen on Friday. Most of this move happened on Friday. But let's look at the expectations for the market grid for this week. So at least R1, R2, that's 2296. That's the numbers that lined up with the expectations on a daily. But look for an R2 2317 plus to happen. And we could even see an R3. I think this thing could get into a runaway market here as far as that goes. Let's go ahead and let's go to those spreads. And I told you I added a spread. Just for fun, I'll just have to tell you what these are. This is the Dow Jones versus the NASDAQ. So it's starting to underperform. It's actually, the spread has made a new low. The next chart here is the S&P versus the NASDAQ. It's fading. One of the reasons why the S&P is starting to fade is the fact that there's a fair amount of NASDAQ stocks at the top end of this index. The next market I'll show you, this is the Russell, and I'm sorry, this is an MDY, mid-cap. Mid-cap never made a new low in the spread. The Russell did, I believe. I'll bring that up next. But this is a nice bottoming pattern on this spread. And I've told you folks before, as far as things go, one of my expertise is trading these pairs because I spent a lot of years working with institutions on yield curve trades and those type of things. So you have to understand how these act. This pattern here, finally on the Russell, I've been talking to you about, we made a new low, we bounced back in. There's still a couple more sessions we're going to need to see this thing really start to move. But I think we're very close to the breakout. The next couple days are going to tell us everything that we need to know as far as this trade goes. It will be critical that we see some follow through on the Russell prices in the expectations that I just talked about. That, I believe that will be what it's going to take to actually move this market higher. And I just want to just talk a little bit more about all the indexes here. And I went back, I think probably going back to November, early in December and January of last year. And I actually went back as far as July, talking about how I believe that the Russell was going to have to outperform the NASDAQ to move the markets higher. And I think that is the same cycle. So what we saw that outperformance, if you recall, like in January or early in the year, just flashing back, the Russell was up 18 and the NASDAQ was up 2%. That was it. And now we saw that flip around, and I believe that leadership's going to come back in, and the leadership's important for this market to actually get some traction and move up into like a 46 handle on the S&P. And ultimately, I'll go through, I think Wednesday night, I'll go through some of the details. I'm trying to do two things on the channel now. Sunday night is a little bit deeper. It's probably going to take me more than 45 minutes. We're around 30 minutes right now. But I'm going to go into more deep analysis on Sunday and Wednesday, and then we'll wind down through as we come into the end of the week. But just to make this clear, we need these small cap indices and the mid cap to kick in to get some asset class rotation to make this thing work. The FANGs have been really not that good this year, or the FANG man has been good, but not at the level that, that is going to lead the markets higher. So I believe we're going to need to see this spread kick in. So enough of that, but I just want to make sure I made that point as we go forward. So let's get into, I'm going to do a bit of a blitz. We're going to go to the 10-year, we'll hit the dollar, and then we'll do crude and gold. So I'm just going to go on a run here and just buzz through these things. Let's start with the daily chart on the 10-year. Now we saw a little bit of a reversal. We hit some pretty good resistance. We also got an RTX sell signal. On Wednesday of last week, we saw the couple days sideways. We're also watching the market grid turn down, but this is the thing to watch here. These PPMs have turned up. I remember when we were down at the lows, down here when we printed at basically 1.13, that was the significant bottom of this market. And I mentioned then I thought we would rally back to the 200-day moving average. We did that. Now we're in this cluster of numbers here. Let me just bring this up, and you can see we bring up all the cluster numbers here. 1.28, 1.27, 1.28. Those were all of the moving averages on a daily basis are converging. And the next couple of days on the PPM, the action there is going to let us know how this support is going to hold. I'll show you on the weekly chart. Let's go ahead and look at that. The weekly had a cycle bottom signaled, and this is what has to happen. This low here at that 1.129, 1.28, basically this level has to hold. If this level holds for the next 2 weeks and we get back above the 1.35 level, then we're going to start to challenge some numbers here. It's going to get really interesting. We're going to start to go back into the 1.4 handle and then see how this configuration sets up. But here's what's going on, and I talked about this back when we were at the lows, is that the PPMs were extremely negative. We're still minus 1.03, so that's a substantial downtrend. That's at 1.4, so we got a ceiling right now, 1.42. On the downside, the floor is going to be around the 1 point. I just mentioned on the daily. Let me go back there for a second. The daily is going to be right at this 1.28, 1.24. That's been the key level. There's lots of support at those levels. So go back to the weekly chart. This cycle that hit last week will be confirmed, especially if we can get back above that 1.35 on a weekly basis. So we got a long week. We haven't even started it yet. But if we can get above that level around on the coming into Friday, I'll continue to cover this as we come into the end of the week. So it looks like to me the pattern set up. We're likely to see some sort of consolidation for 2, maybe 3 weeks, staying above those 1.24 level, possibly getting back into 1.35, and that's going to be your key pivot range. So you should see 1.22, 1.35, maybe 1.37, something like that. So we should stabilize here. So let's go to the next market I'll cover, and let's take a look at the US dollar. And as far as the dollar goes, I have been somewhat of, we'll call it a dollar bull for a while as we moved up, and I still think we're going to challenge the 200-day moving average. Right now we're seeing some consolidation. There's some decent amount of support here. This is at the support's 91.67 to 91.37. So it's about a buck lower. That's major support. And this 92.60 level where we're trading right now will add as some support, but I think we could trade back in toward the 92 handle, 91.90, and then see some consolidation and sideways move here. And I think we're going to go through the week probably staying in that range. This is the weekly graph that I have up here. So I don't see us breaking much above or below that area. Just looking at the market grid for this range, we're looking at R2 93.16, S1 92.45, S2 is probably down at that range. You can see S3 is 91.95. This is weekly price of expectations. That would be an absolute extreme. Probably somewhere S1, S2 will be the low. R1 is probably going to be substantial resistance, and we're not likely to get above that, but even then there's 93.16. So look for that range that I just talked about there on the US dollar. So next market we'll cover is crude oil, and crude oil was actually positive about 0.5%. And amazing, I saw somewhere a story that 91% of the oil production in the Gulf, I don't know why it's not 100, but 91% is shut down. There was a little bit of bid in the crude, but we've seen that disappear overnight so far. We're down 5 cents, not a big deal. It's basically stable, but I've got the weekly chart up here, and what I want to discuss with you tonight, I talked about the significance of around this low down here that we printed, 61.74, 60, 70, $61.61 and a quarter is major support. We got that big reversal off of there. We did also get 67.81 was the RXT on a weekly basis, we closed at 68.74. So we did get an RTX sell signal suggesting a couple weeks sideways, actually. And this is what I've been talking about for a while as the key resistance at 70. We printed 69.64 overnight, so we basically have hit that 70 level. We should see the 68.01 should be decent support. If it gets through that, then we're probably just looking at the market grid here, 67.32, probably an R1, S1 this week. I don't think we print down to S2. We'll probably be fairly tight on the week, but if we do go down S2, that's fine. That would actually set up a pretty good pattern as we go through the week. Now the PPMs are still negative on the PPM1, so the 10-week moving average at 70.11 is declining right now by about 50 cents a week, so it's down at 70.11. This is an accurate calculation right now. It's updating real time. So that's going to be your resistance, and that'll put us right at R1. R1 70.16, the 10-period moving average 70.11. So that's going to be your high. I would look for probably R1 on the upside with the possibility of S1, S2. In spite of the hurricane and everything that's going on there, I still see that happening in that range. So the PPM1 is negative and not really accelerating, it's flattening out. So it'll take probably 2 more weeks for this market to complete the process of bottoming and setting up the next pattern. You guys all know I've been talking about, I still think we're going to see like a $90 on crude. And I don't know what the events are going to be. I have no idea what will cause that, but it continues to set up, as far as I'm concerned, to look like that's going to be the case. And but for right now, this week, look for probably a $70 high, 65 range. So a $5 range in there, something like that. Maybe a little backfilling after the big reversal. The key thing will be this week, though, and I just want to say this in case I get distracted. The key thing for this week will be we need to close above 68.74. If we do that, that suggests we'll get 2 more weeks of upward movement towards the upper end of whatever the grid is. So I'll cover that as we go through, but this is really critical from the standpoint of what's going on in this pattern on crude. So this upward slope, that 40-period moving average, 61.31 right now. Let me double check that number. 61.89 is that number right now. That's going to be your key as far as the major support level. We're not likely to get anywhere near that. Like I said, the setup is $65.70 to $70. That should be your range on crude this week. So the next market I'll cover is gold. Let's start with the daily. It's pretty amazing that we got this big bid, and this has a couple things that I believe are happening here. We're trading up to that 200-day moving average. We hit it on Friday. The high was 1821. The 200-day is is 1819.90, and if we go to today, that number is 1890.60. So it's still declining a little bit, but the high 1826.50. So we managed to trade above that. We look at the market grid on a daily basis. R1 25. The high's been 26.50, so we printed an R1. S2, 1806. This 1800 number should be a huge support. And the key, though, we have a reversal, but we did not get an outside reversal on gold, but the PPMs have turned substantially. When we were down back here, when we had that flash crash on a Sunday night several weeks ago, that was the print low. I've been talking about this. This is a very bullish pattern it sets up. I think that was a blow off low. And now what we're setting up here, I'll show you on a weekly chart, is something more substantial, because the weeklies have set up a very bullish pattern. And now we've gotten above. On Friday, we were able to close above 1814. That was your key number. That was the 21 and 40 week moving averages. The PPMs on PPM 3 down here, I just put a cursor so you can see where I'm talking about. This is significant that this is actually going positive here. And this is telling us that this whole pattern is going to turn up. And I've been talking about this on a weekly basis. Ultimately, we're going to see the 1890s, 1920 levels going back to the highs that we saw back in June. That's likely to be printed. That was 1923. And a lot of people have talked about this market's dead. I don't believe that's the case. I actually believe that gold is telling a different story. I think I did this on my Twitter account. Everything kind of blends together. But somebody seems to think that gold is a good buy, and that maybe inflation is coming back in spite of how the interest rates have traded, and in spite of what Chairman Powell is telling us. He's jawboning the market, trying to tell us that everything is temporary and inflation. It doesn't look like it is for me. I still don't think, though, and I've set this up, if you're following me on this channel going back a few months, I said we're not going to know until September, October, whether this stuff is transitory or not. And what I talked about in the opening comments was actually that the supply chains are trying to lock up again. Boats are getting backed up in Long Beach and some other ports around the world, not just here in the U.S. They're actually getting really tight again. And there's a reason for that too. And I'll have to bring up the dry shipping index at some stage, and we'll do some analysis on that. But the reason why, probably the worst job in the world is being on a container ship. That's what I've heard from a number of sources. And the people that are driving these things, there's a website that tracks all of the container ship and boat accidents. It's insane how many of these boats are crashing into each other and other things, going through ports, some crazy stuff. So, it's just, nobody wants to work. No one definitely wants the worst job in the world. That's what I read an article somewhere, and they had some really good points. Being on a boat out in the middle of the ocean with a bunch of containers is not very much fun to be. So anyway, the point is that if all this continues to happen, inflation is going to have potentially another spike. I talked about this just to close down this market part. I'm going to do the cryptos here real quick here in a minute before we finish. But this whole scenario that's setting up is going to play out in the next couple months. And I believe what we'll see is, like I said, gold will move up. I think we'll see the interest rates start to move up, and then we're going to see that maybe it's not so transitory. I'm still sticking with that. I'm not buying into the rhetoric and the jawboning of Powell and the Fed. And it's, like I said, the next couple months are going to be probably the most interesting months we've had, maybe going back a year ago, because this last year at this time is when a lot of our models started to kick in. In September and October, November, we were buying on an intermediate basis. Our models were buying both hands, and a lot of those things are up substantially. So I'm going to go in. I'll come back at the end once I do the cryptos. We'll have a little sign-off message, and we'll go from there. So looks like I'm going to be pretty close to an hour by the time I get done. So thanks for hanging out tonight, folks. So we're going to start off with the weekly chart on Bitcoin. And I'm going to go on this one. I'm going to try to break it down. We're down 317, 48, 546. If you look at if you get to our market grid, you'll know these numbers. But the market grid is projecting out for the range of probably extreme of 45.4. We printed 46.322. That's between an S2, S3. This is a weekly basis. And we're on the upside 51.782. So keep those numbers at hand there, because those are going to be key numbers. The numbers here on the market grid. Let me zoom in on that for just a second here, so you can see them here. Make sure you note these values here. And the one thing that's going to be really significant, I think, is, and I've talked about this number, 43,460 is a major pivot. If you see that number, I believe you can buy it. You can buy the dip there if that gets there. So we'll see what happens. Let's go to the daily, and we're going to drill from top down, go weekly, daily. Interesting. There is a cycle coming in here today, but the 10-period moving average 48.04, low 48.128 right now. We look at the market grid, 48.353 is S1, so S2 is 47.779, and the extreme for today is 46.691. So we should actually remain above this 10-period moving average right where we are right now. It looks like 48,000 is going to be pretty decent support here. And as long as we stay above that on a daily basis, we should see the market grid turn up tomorrow on a daily basis. So I'm going to do one more. I'm going to go to one more level, and we're just going to break this down to a 60-minute chart just to break this short-term stuff. So we're seeing this correction here several hours ago. Let's see, on 8:27, we got an RTXL. We got some sideways here. We almost got another RTXL, but we did go through the extreme. This is an hourly chart, and we're seeing this thing climb down into some of these numbers here. So for this hour we're in right now, we're looking at S2 right now is 48.170, 48.305 should have support there. So just keep those numbers I just put in play there a minute ago. Those should be key numbers. The final market we'll do, it will be Ether. Let me just go up to we'll do the same thing. We'll do a top-down view here. We'll start at weekly. I did discuss this over the last couple of weeks. Ether's kind of stuck in a range here. If you look at the market grid, probably R1, S2, maybe we'll just call it R2, S2. This is going to be a locked-in range, 34.52, 30.78. There's probably some trading opportunities in there, but the PPMs are actually very positive. And what we're seeing, and this has now happened, I talked about this last week or maybe Wednesday night, is that the 10-period moving average is actually penetrating through the 21. And what we're going to see is that this number, now this is weekly, is going up at about $150 a week. So 2,700 is going to be the magic number there. We look at the STX for this week is at 28.91. So somewhere between 30.78, 28.91 is a place where you can start to look at for some kind of bounce. Let's go to the daily. Daily's got some support right here at the 10, 31.85. Last trade, 32.08, low 84. So we basically came right into that number exactly, actually. But we look at the market grid for today. We're looking at S1 3218, S2 3166. There could be some additional downside. Oh, that really happened, didn't it? I didn't have the screen full, but anyway, you're looking at all of these patterns here, and they're set up looking bullish. The PPMs are all very positive here on Ether, looking like we're going to start to move higher in this pattern. The only thing I would say on a daily, looks like some more sideways is likely for at least one more session, and looking at that 3,063, these numbers all line up together pretty good. Well, folks, that's going to do the show for tonight. Really appreciate you watching and hanging out with the channel. Make sure you subscribe and like the video so our friends at YouTube will recognize that you folks like this. Anyway, thanks again. We'll see you tomorrow night. Thanks for watching. By the way, there's a August promo. Go to this link, Expert, you get a 20% discount. See you guys tomorrow night. Yeah, Belena, it's for the year and beyond. Reach out to us. Send us email. info@kindlereport.com. Have a great evening, everyone.